Hey, welcome. Today, we're going to decode the language of money. If you've ever felt like the financial world has its own secret code, well, you are in exactly the right place. Let's crack it open together.
Forex, stocks, crypto? I mean, you hear these terms thrown around everywhere. But what's the real difference? It's actually pretty easy to get them all mixed up. So today, we're going to break them down one by one and really see how they all fit into the bigger picture.
So, where do we even begin? Well, we start with the most important building block of them all, the idea of an asset class. I promise, once you get this one concept, everything else just starts to click into place. The absolute easiest way to think about an asset class is to just imagine it's a bucket. That's it. We just put similar types of investments into the same bucket. Now, why do we do that? It's because things in the same bucket, like, say, a bunch of different company stocks, they tend to react to market news in pretty similar ways. It's all about grouping by behavior. Simple as that.
Okay, let's look at our first couple of buckets and see how this works in the real world. We're going to start with two of the oldest and most well-known asset classes out there, Forex and stocks. You can think of these as the traditional titans of the financial world. First up is Forex, which is really just short for foreign exchange. This thing is the biggest market on the planet, and all it is, at its core, is the simple act of trading one country's money for another's. I mean, think about it. If you've ever traveled and had to exchange your money, you've done a Forex transaction.
And this is the perfect example. When you see something like EUR/USD, it's just a currency pair. It's showing you the value of the euro compared to the US dollar. And traders are just betting on whether that relationship, that value, is going to go up or down. That's Forex in a nutshell. All right, next up, stocks. You've definitely heard of these. Buying a stock, or what they call a share, literally means you're buying a tiny slice of ownership in a company. You're basically placing a bet on that company's future success. So if the company does well, the value of your little piece goes up. If it doesn't, well, it goes down.
For example, buying a share of Apple means you own a teeny tiny fraction of the company that makes all those iPhones and MacBooks. It's a really direct way to invest in the success of businesses you probably know and use every single day.
Okay, so we've covered the titans. Now let's switch gears and look at two other really fascinating classes. One that was born from digital code, and another that's pulled right out of the earth. Now, let's talk crypto. Unlike cash, you can't hold it in your hand. It's 100% digital. But here's what makes it so different. It isn't controlled by any single bank or government. Instead, it's secured by this huge global network of computers using a technology called cryptography, which, you guessed it, is where the name crypto comes from.
And the poster child for all of crypto is, of course, Bitcoin. It's the one that kicked off this whole digital revolution, really forcing us to rethink what an asset can even be. It's a brand new bucket, totally unlike anything that came before it.
Okay, now let's go from the purely digital to the purely physical. Commodities are the raw, tangible goods that are basically the building blocks of our entire global economy. We're talking about things you can actually touch and see. Think of things that are either mined from the ground or grown. Gold, for instance, has been seen as a valuable commodity for literally thousands of years. And oil, it powers our cars, our homes, our industries. These are the real, physical resources that make the world go round. Whew, okay, we've covered the four main buckets. So just to make sure it all sinks in, let's line them up side by side for a quick little cheat sheet. Here it is, nice and simple. Forex is all about trading currencies. Stocks mean you're owning shares of a company. Crypto is those new digital assets built on code. And commodities are the physical natural resources. Four different buckets, four core ideas. That's your foundation right there. All right, you've seen the concepts, you've seen the examples. I think it's time for a quick lightning round to make sure it all stuck. What do you say? Just 3 quick questions. Don't overthink it. Let's go. First one, you're swapping your euros for some US dollars. What market are you playing in?
Okay, next up. If you buy a little piece of ownership in a public company, what do we call that piece? Yep, it's a share or a stock. You got it.
And for the final question, gold. It's a physical, natural resource. Which one of our buckets does it belong in?
Hmm.
You know this one. It's a commodity. Awesome. And that really brings us to the main takeaway here. We've just taken some of the biggest, most confusing buzzwords in finance and sorted them into clear, simple categories.
Look, knowing the difference between these core asset classes isn't just trivia. It's genuinely the first major step toward real financial literacy. You now have the basic vocabulary to actually understand the financial world buzzing all around you. So seriously, congratulations.
So I'll leave you with this question to chew on. We've got the established titans like stocks, we've got the essential resources like commodities, and we've got this wild, disruptive new frontier of crypto. Looking ahead, which one of these forces do you think is going to shape our future the most? Something to think about. Thanks for joining me.